So we have no earnings today, right? Nice peace and quiet until tomorrow early morning. You know, somebody had a great point today. I tell you, this market, no matter what, like you think you can think like a contrarian in this market. Sometimes you're like, you try to think of this market like a contrarian, and then you overthink things. You say to yourself, wait a second, but maybe everybody is thinking like a contrarian. And if you really want to think like a contrarian, you got to think the opposite of a contrarian. Tie your brain into knots. And the example is tomorrow morning you have the CPI. Obviously, it's going to be hot. The White House already gave their warning, got the message out. So it's almost like, I got the question earlier today. Doesn't everybody know it's going to be a sticky number tomorrow? Like, possibly we rally off that number. And then you look at the action today, and the problem with all that was, instead of going in with some decent hedging on, some of that had come off the last couple of days. Well, not so much. The NASDAQ wasn't too bad. The NASDAQ put the call. But anyway, that thinking took, some of it sapped away some of the bearishness, if that makes any sense. Where you could have yesterday, today, people slapping on hedges, getting all protected. And then tomorrow you get a hot CPI number, initial reaction, selling, and then, a nice, at least intraday squeeze. But it would have some gusto. Are we ready to go here? We're ready to go, man. All right. I got everything muted. That's all that matters. All right. So, again, there's not too much of anything new to talk about. Let me start off with this, right? I know it's earnings season, and I know it's a bear market, and I know it's the Fed's rigging the game. All right. That being said, we know all this. We've been talking about this every single day. But the sweeper activity, the flow in individual names, is about probably as poor as I've seen it in a long, long time. And, is that outlandish to say? I mean, if you think about it, when did we go through any sort of market cycle like this? We haven't been in one, ever, let alone over the last 10 years. But the action in individual names so bad. And here's the thing. I've been in violent corrections where call buyers would just dry up and disappear, and the put action would be super aggressive, and was assigned to stay on the sidelines, and you wait for some signs of call buying. But there would be at least pockets of speculative call buying to play for short-term squeezes. There was always that, right? Unless you get into, full-fledged bear markets like we're in now. And for some of you who are new to the webinar or a new period, what I mean by that is, even though the lack of quality buying out there, right? Nobody really sticking their neck out and looking to put on any size in a meaningful way, there was always this violent pace to the call buying on the more speculative side when they were playing for squeezes, offsides positioning, sentiment, just intraday rallies. And it was so easy to pick up on because you would see that lack of call buying, or you would see, the put buyers dominate. There would be no call buyers to be found. And then all of a sudden, you'll see this rapid fire action come in, right, on the call side. And you could just sense it. You knew it was real. Now, granted, it would come in weeklies and front month expirations. And you never knew if they were going to be there in open interest the next morning, because in these type of markets, even in corrections, a lot of these option players are flipping, you know what I mean? But you had that appetite, you had that violent pace behind it. What we've lacked here, and probably now, I don't know, time flies, I can't keep track of time. I'm so bad with it, but probably I would say maybe the last 2 months, give or take, there hasn't even been that. There hasn't even been that speculative buying that would come in when they had bears offside and try to squeeze them. Sweepers, hence machines, are notoriously known for that. When positioning is lopsided and you get bears leaning aggressively in one direction, and they sniff out an opportunity where put buyers kind of exhaust themselves, look tired, look like they're out of ammo, the machines and sweepers would pick up on that like this. And you'd see some rapid fire call activity come in, that would snowball into more call activity, and then it would lead to even more. And just, you get those trend days where nothing but call buying in a correction, right? Even in bear markets. But you would get that trend day where the flow was mostly aggressive call buying in weeklies, and they were playing for a squeeze. We don't even have that anymore. Why is that? I really don't know. Maybe it's just as simple as people, or whoever's behind these sweeps, don't feel it's even worth their while at the current time to even roll the dice in playing for that, if that makes any sense, right? So even playing for those short-term squeezes, to them, the risk reward, or even just the risk, is not worth it. So, and it's for those of us who, and primarily play on the long side, like myself, we always had that, and we would feel disciplined at the same time, because we would sit tight. We wouldn't get FOMO, we wouldn't get out of our realm. We'd wait for that type of action to come in, and that's basically what we sat patiently for. Wait till those squeeze sweepers show up, and that's when we play. And right now, like I said, we don't even have that. And what we have now is, you have this sporadic, isolated action that's so spread out, that's just not going to help generate any momentum on the index level. So, like, I give you an example. Like today, I played. Honestly, today was a day I normally, I would have been shocked me if I didn't play anything today, as far as day trades. But today, we got in for a squeeze. Let me show you exactly where. If you were watching the tape today, you could probably relate. It was in the was it morning? Yeah, it was morning. No, morning, but early morning. Let me think here. Okay, I'm drawing blanks here. Anyway, I think it was earlier in the day, after, it's got to be right here. After we had this kind of reversal, where the market was green, right? The market was green, then went red. Is that what happened? And then right here, we kind of had an opportunity to, gather up some steam. They had the bears if they wanted to. They had them yesterday too, several times. But the call buying just never came. It never came. And you talk about like individual names, forget about individual names. Like even that, you would have, like, okay, let's say like a Boeing, like Khalid was talking about, right? Boeing was actually up today with the airlines. Or take the airlines, for example. You would have these days where they come in and they find a few names to hit up aggressively, and you would have some solid momentum in those names to play. That's I don't play the index as much. That's what my game's individual names, and especially too day trading. So they'd come in and tattoo a Boeing. I just look to get in the middle of that and raise stops and try to ride the momentum. very, very little, if any of that. Like the airlines, Boeing only had a couple of sweeps. But like American Airlines had a couple of sweeps today, UAL. Other than that, again, sporadic. So you see a little sweeper activity early morning, and then you don't see sweeper activity for a couple hours later. That's not going to do it. That's not going to cut it, especially in this market. With the volatility and liquidity abysmal. You don't want to sit around without sweeper confirmation. Well, if you're me anyway, for that long. Again, you want to see that action come in continuously, and that's what you're writing, right? So it's been pretty bad. It's been pretty bad, even on an intraday basis. It's been pretty bad. I just, as a whole, again, I try not to get too pessimistic. You know what I mean? Because I don't want to rely on how I feel or what I'm seeing. But when there is no sweeper activity, especially when you have positioning pretty lopsided at times, as we've seen, right? When you're not seeing the sweeper activity confirm that, then what you're seeing and what you're feeling, that negativity, it's real. It's real, because it's not just you picking up on that. It's obviously the money that matters out there that's picking up on it as well. And what I mean by that is, I think what it comes down to, guys, and this is the question we need to find answers to, is that, does this get worse from here, right? Because again, what I'm comparing it to, if you rewind and go back to the COVID rally off the lows, okay? And if you remember, right, we labeled all those players non-believers for so long, who didn't want to participate in the rally because either they didn't believe or they were waiting for a legitimate pullback to get in, and the market never gave it to them, right? And this kind of reminds me of that, where even the bears, like we've discussed, right? Drunken Mill, even the bears are looking for better entries to try to find shorts. And, a lot of times the market is not going to give it to them. The market's just not going to give it to them. And, what ends up happening is, instead of waiting around, these guys will give up, get that FOMO, and chase the downside. And the immediate short-term price action is going to get ugly, okay? But you can reach that even short-term capitulation where you can put in a half-decent bottom and possibly some sort of bullish trend over the next multiple weeks or multiple months, so that's what kind of my gut is thinking here, because everybody is kind of waiting for that bear market rally, bulls or bears, to flush out some of the positioning here. Okay, but that being said, again, that's just my gut. It 100% could be wrong. It's been wrong many a time. But I think what we got to find an answer to eventually out of this is, does this get a lot worse from here, right? And then we set up a low that can hold and we can trade off of with some confidence. Because honestly, I don't know about you guys, I don't have it here at all. I don't have it here. You have some positioning that's offside, no doubt, especially on the professional level, like hedge funds and CTAs, right? And that's why we've been looking for a lot of intraday squeezes, right? For that, just based off that sole reason. But you got a lot of stuff out there there's a lot of more damage that can be done without a doubt. That wouldn't. I'm trying to find the best way to explain it. In other words, like we look at the fund flows. You know what I mean? More money came into the market last week. You know what I mean? More money came in. They're not They're not selling shit. They're not plowing out of this market. Right? They're looking at this market as a buying opportunity. They're looking at this market. I hear the term generational buying opportunity. This market doesn't give generational buying opportunities out like they're Halloween treats. You know what I mean? Generational buying opportunities when everybody's shitting their bloomers and don't want to touch it. And the people who have the coconuts and the liquidity to get in, it ends up becoming a generational buying opportunity. Not because, everybody sees it as such. So that's what it comes down to for me, because the backdrop of the current situation, it's a menagerie. You can't draw it up any worse than how we have it right now. You really can't. As bullish and as glass half full as you want to be, okay? With the information we have in front of us, right? And the only tools we have to look ahead, I don't know about you guys, but the only tool that I have that can basically possibly look ahead is sweeper activity. Otherwise, I have no idea what's going to happen in the future. The information we're looking at it's hard to find that light at the end of the tunnel, right? It really is. Kind of like what Tony P was talking about from Goldman last night. The one question you got to ask yourself every time you fire up the computers in the morning is the Fed still, or central banks across the globe still aggressively tightening into a slowdown? Right? Like that sentence right there is the single worst predicament you can be in for risk assets. Right? Like we would fear the Fed or central banks tightening the spigots if the economy was doing well. A lot of people would get more conservative, even move to a larger cash position. If the economy was hot as a firecracker and central banks were tightening aggressively, you would still be really careful about that backdrop. We have a situation here where there's some shit under the hood of this economy that look like it's ready to fall off a cliff, and they are aggressively tightening into it. You know what I mean? Like that's a debacle. That's a debacle. So it's a really difficult and a really bad backdrop to try to find any sort of long opportunities as far as positions are concerned. And, why aren't we seeing call buying, right? Why aren't we seeing stock picking in the flow? What? That's the reason. That's the reason. You know what I mean? That's the reason. Because it's this simple, guys. If they're still, right, like Tony P's saying that's the question you ask yourself every morning. If they're still aggressively tightening into a slowdown, then things are going to get materially worse. You understand? Like there are still people who are looking for green shoots out there. Okay. And I'm not saying you can find green shoots out there, but the problem is there's not going to be any green shoots 3 to 6 months from now. You understand? It's not going to look better 3 to 6 months from now than it does today. Do you guys get that? Does that make sense? There's no way. There's no way. Again, I'm not trying to predict the future, but just for the simple fact that central banks are aggressively tightening into an economic slowdown, right? Common sense, things aren't going to look better 6 months from now. They're going to look materially worse, no? So I think that's why the question becomes, is there some sort of relief rally here, right, that buys time. Because that, if your rebuttal to that is, well, it takes time, it doesn't have to happen now, you're 100% right. That's the problem. It doesn't have to happen right now. These Fed, what the Fed, the action the Fed is taking, we're not seeing it now. Okay, what you're seeing slow down in the economy, right? Everything we're talking about is not from what the Fed has just done. Same thing when the Fed cuts rates in QE, you see it minimum like 2 quarters from when they take that action. You understand? So the argument for potentially some sort of trading range here for maybe a couple months, right, is a legitimate one. But ultimately, you know, what follows it from there is not going to look good. Now, you know, we don't want to get too ahead of ourselves because, you know, we could see all-out capitulation by that point. We could see, you know, fund flows go negative. We could see so many different things. So you don't want to jump ahead that far. But the point I'm trying to make is that's basically where we're at right now. That's the only question. Do the wheels start to fall off here, or do we go through a little lull, you know, a little pocket of relief where commodities have come in, you know, the CPI is hot, but people are starting to talk peak inflation. The economic numbers don't look that bad yet. Earnings don't look as bad yet. You know what I mean? Because all this stuff, and I stress the word yet, is because it's coming. That's the inevitable. And you hear guys like Powell and all these Fed guys on a day-to-day basis, no matter what they say, they close out with, well, you know, a soft landing, it's going to be a rough landing. You know, there's going to be a rough patch. You know, this is not the rough patch. They're telling us that the economy's full steam. Everything's beautiful right now. You understand? This is beautiful the way they're looking at it. Everything is flowers and rainbows in the economy right now. Okay, what they're warning about is what things are going to look like a quarter or two from now. And where, you know, I mean, it's going to look ugly. It's going to look ugly. You know, it's going to look ugly. Even if they pull off a miracle and it's a soft landing, it's going to look worse and feel worse than it is, you know, right now. And ultimately, that's when you find a real bottom. You understand? That's when you're going to find a real bottom, when there's going to be nobody who wants to sit through it, nobody who wants to even think about stocks a little bit, let alone search for a bottom and ask the question, did we bottom yet? Every single day. You understand? Because all the noise around them at that time is going to be disgusting. Disgusting. I don't know if the market, Steven's got a good question. Like, that's another argument, right? The market, has the market priced in that? I don't think the market has priced that in yet. You know, because think about it too. Like we talk about even just like fund flows, right? They haven't capitulated yet. They haven't thrown in the towel yet, because, you know, if it ended right now, you know, they still see light at the end of the tunnel. You know what I mean? They haven't been spit out yet. So when is that money? And it usually comes out when you get into these bear cycles. I mean, when you get into these bear cycles, these things, they don't usually go half-assed. It's a full cleansing. You know what I mean? It's a full cleansing. Like it doesn't leave a few, some remnants left over, you know? It usually will clean out all the speculation everything that caught, was on fire back in the day, everything that reeled in riffraff back in the day is just lit on fire and torched. And it's what happens is it flushes it all out, and then there's a new, a whole new batch of a whole new shit that emerges. But from that point, you climb the wall of worry and build from there. You know what I mean? I don't think, like, if things ended here, I don't think you'd be climbing the wall of worry. Sooner than later, you know what I mean? You'd have, like we were talking about on the Sunday webinar, you'd have jarred farts and boob sweat heating up before you know it. Before you know it. These cleansings, pricing them in, because the problem with pricing them in is it takes time. Like you think about the 2000 bubble, you could have asked that question, a gazillion times on the way down. Did we price in this? Did we price? And what happened was it got worse and worse and worse and worse. So maybe the market has priced in a slowdown, but did the market price in earnings revisions coming down significantly? Has the market priced in fund flow, which has been a huge buyer of this market coming out? I don't think those things are priced in yet. I really don't. I know they're not, because they, you know what I mean? We're at, what are we, 3,900? If the market wanted to price in all that stuff, yeah, it's done, exactly. It's usually done in stages. But yeah, I don't want to, like, I love talking about this shit with you guys, but I don't want to get too wrapped up in that, because you don't really want to focus too much on that stuff when it comes to pushing buttons in this game. You know what I mean? Because eventually you're going to get to a place where you're going to be so hesitant to buy anything, and when it's time to really look to go shopping, you're never going to get yourself to. But Steven, you can relate. Like, if this thing was going to end, and again, we talked about this Sunday with members, but if this thing was going to end just like a correction normally ends, it would have ended here. This would have been it. You know what I mean? This dip would have been bought, and we would have started seeing constructive sweeper activity and price action and new leaders and everything. Like, where are the new leaders coming from, Steven? And where, like, there is, I told you guys this so many times now. I don't even have anything I'm even looking at right now as far as names. Like, there are no signs of anything constructive being bought, anything. Okay. The big names, the flow is an absolute shit show every day, right? I'll give you an example. Today, and granted, it's earnings season, so it's a bad example, but today you see some leap buying in Amazon, okay? Jan leaps, and then we saw some September 2023 calls come in, okay? Right after that, we saw somebody close a position in September. So that takes care of the Septembers. They were rolling, okay? You pull up the flow in Amazon, and every day, it's like you would think they're reporting. That's how active and mixed and sloppy it is. There are so many, and the reason why is because of this, because of the bull market and how aggressive it was to the upside. There are so many hands in this Amazon cookie jar. You know what I mean? There's so many players already in this, hedging, replacing stock, doing this constantly every day. Who's looking for a bottom? Normally these things, when you go through corrections, the flow dries up. Like, you don't see any sweeps for weeks. And then all of a sudden you'll see some call sweeper activity come in and you're like, oh shit. You know what I mean? It's like every day there's some sort of action. Um, and it signals that there's just so many players stuck in these things. Yeah, it's just messy. Exactly, Sam, messy. So, like, me personally, okay, I think these things are dead. Like, these are the last things. We don't want to buy these things. Like, when you get into these type of phases, what comes out, the next, I hate to say the next Amazon, because that's bold statement, but the new leaders, new names emerge from this stuff, right? So not even on an Amazon level, but the Rokus of the world, the Nets of the world. You want to go even before that, the Twilios of the world. All names that you weren't familiar with came out of consolidations or corrections, right? And that's what's likely going to come out of this bear market. But it doesn't have to happen now. It can be a while, and it can be very gradual. I mean, right now, it's almost, we haven't seen the full liquidation yet, in my opinion, for that to start. And I think that's why it's not starting. You know what I mean? We're still in the heart of a bear phase. Fundamentals still need to deteriorate. Yeah, it's not forget the correction, Praveen. It's no longer a correction. This is a bear market, right? So sometimes bear markets can be shorter than others if you avoid a recession or a harsh recession. You know what I mean? But this is a full-fledged bear market, okay? And another great point we were talking about Sunday, which we got from Bova Hartnett, right? When you don't get that capitulation from fund flow, and we didn't get any capitulation, forget about fund flow, but when you don't get that capitulation, those V-shaped recoveries, they don't exist. You understand? They don't exist. Every V-shaped recovery, every single one, before the turn, spit out everybody. Okay, the fund flow, everybody got spit out. COVID, 2018, you name it, every single one. All right. And again, I always do this like I'm talking to the same people and members all the time, but I'll give you an example of what I'm talking about here. Hold on. Let's see if I did it right this time. I got to start. This is global. This is not the chart, but I'll find the other chart, okay? But so you see this is broken up, but all this money that came in, right? Almost at least half of it statistically comes out. Let me find the better chart. That's not the good one. I think it's on my regular Twitter. That's why. Hold on. Is it on here? Oh, maybe I can find it here. Hold on. It might be on here, actually. Deutsche Bank does a good job. Hold on. Over here. Let me see. I think it's over here. Yep. So you see, can you guys see that? I can't blow it up anymore. All right. But like, look at this, for example, right? See this yellow line here? Okay. That's tech. Money coming into technology. Okay. Look where it is right now. Nothing came out. Nothing came out. Right? You look down here, large cap, blended, these are just regular fund flows, all came in literally late 2021 into the highs. Where's the one? Is this it up here? It doesn't look the same though. Maybe because it's drawn out a little bit. I want to find the good one that you guys could see what I'm talking about. Hold on. Let's try this. Oh, you dropped your bone, Dukes. Hold on. Is this it? No. How could it? Oh, here it is. There we go. So here, this chart right here. Google's good. He's getting big, Google. He's bossing everybody around already. Went from a little runt, now he's bossing everybody around. So this is the chart, guys. A lot of you have seen it already, just in case, you know, anybody's new, so they know what the hell we're talking about. All right. So you see this ramp, okay? When this is all done, even there could be a relief rally. There could be a low put in for even a couple months. And then we roll over and spit out everybody once and finally, you know what I mean? But ultimately, we're going to go into something like this again. Okay. See what fund flows did during all these years? Okay. They were all burnt from 2008 for good, right? For good reason. If you traded, if you owned, yeah, these are the passive weekly fund flows trade. You know, where you put in money, don't look at it, and you think you're a lock to make money. Those are those guys. Yeah, the passive guys, not the active Reddit traders, you know? Right. Okay. So when you go through these cleansings, like I'm explaining to Stephen, these periods of the bear market, okay, like this, not a correction, a bear market, what usually happens is you wipe this all out. Okay, they get so discouraged with the game that they want nothing to do with it. They don't even want to think about stocks anymore. Forget about putting in new money because it might be a bottom. Like every day, you can find somebody asking if we've bottomed. Literally, every day. You hear it on CNBC Bloomberg every day. Too many people care about it. This market's going to wear them all out. Nobody's going to want to give a shit anymore of that crowd. And you go through a period like this, right? And you see this dark blue line, what it did, right? And the market was great. All new. You talk about new leaders, we talk about, think about all the new leaders that gave birth throughout those years. But they still wanted no piece of it. And then they finally decided, okay, it's time, right? And look what they did all at once. So that's, you know, that's the big concern here. Like we see hedge funds, we see all these on the professional side that, you know, they're dipping their beak on the short side. They're in cash. There's no exposure to equities. And the positioning looks lopsided, but the risk is this, right? The risk is real capitulation that we haven't seen yet. And all this comes out of the market. You know, that's, if you stick your neck out here, right, thinking we've bottomed, okay, you're a believer that this is not coming in. You understand? That this is just going to do its thing and continue higher. Well, what usually, Hartnett did a study on this, and usually before market bottoms, at least half will come out. And then you'll see it, even after the market bottoms, you'll see it gradually play dead and lean down, right? Because they're so discouraged. So, like for example, Praveen, he made it for every $100 that they put into the funds, right? For every $100 they invest, usually 40 at the least will come out. $40 of that 100, they'll redeem. Okay, you know how much has come out now? $3. And honestly, that's a couple of weeks old. Honestly, it may not even be $3 anymore because we've had some inflows. So maybe it's nothing now. You know, maybe it's nothing. So that's the issue we face. Now, again, this doesn't have to be right. They don't have to all come out tomorrow. But the reason I'm even telling you guys all of this that we're discussing today is that it really paints a, like I said, a horrible backdrop for you to get aggressive and start, picking things off on the long side. Even if you're buying with time, usually you buy with time, you can gradually piece it. The problem with that is if there is capitulation, you could still be early. Like, people don't realize that. You hear CNBC, they're like, oh, if you start buying now, we may go a little bit lower, but in a year from now, you'll be happy. Is that a lock? You guarantee me that? Have you ever been through a real bear market? I may go a little bit lower, but I'm going to be happy a year from now, right? It's not even on their minds because they've never been through it. Guys, I've been through it. You know what I mean? They've never been through it. This market will wallop with these type of people, wallop them that think anything's a lock. And listen, ultimately, it's a good thing. Ultimately, it's a good thing because if you're around to pick up the pieces, okay, there's not going to be many others that you see or have been seeing over the last few years that have been making money, pounding their chest, flashing their stuff. And that's what bull markets thrive off that, right? Bull markets, you heard the saying, they climb the wall of worry. They don't allow everyone to get in and make money. So that wall of worry's got to build though, like I told you, 2008, it literally left scars on a lot of us, right? It scared the living shit out of us that every little pullback, every little minor pullback post that 2009 bottom felt like Armageddon. I bullshit you not. Every little pullback felt like Armageddon post that 2009 low. Could have been a 2-day pullback and everybody was like, oh my God, here we go. Here we go, get in your bunker. You know what I mean? That's how treacherous it was. It left scars. But, that's gasoline for bull markets, as you guys know. Yeah, well, that's it. The thing is, Lourdes, you never, like, how long are we in this right now? How long are we in this? How long are we in this? Because time flies, Lourdes. 7 months already, right? So, I mean, even like, let's say, bad case scenario, we're like halfway through. 7 months go by like that. And if things get dicey, you know what I mean? You fast forward that, right? No, I know, but you make a good point, even though you're trying to be humorous. You know what I mean? Because, and the thing we got to remind ourselves too, the market, like, that's kind of like what Stephen was pointing out. The market looks ahead. So the thing, things aren't going to turn when things start to look good to us. Things are going to start to turn when they look godforsaken awful. And that's what I was started off the Zoom with you guys. Like, it's going to look awful out there when this thing really bottoms. It's going to feel awful. And I know it feels pretty awful right now, but I mean, it's going to feel awful. Because we haven't seen the real deterioration on the economic front yet. We haven't, you know what I mean? Everybody has a job. Everybody still has money, right? Everybody still has money, a job. Nobody's scared of anything. People made a lot of money throughout this bull run. It's going to get, I'm not saying we have to go into a depression, but it's going to get spooky. It's going to get spooky. Yeah, the elections, I don't, it's going to be it's going to be interesting. It's going to be interesting because, think about too, I don't feel bad for any politician on any side, but, think about what they got to try to figure out here with Powell in the middle. What do you battle? Inflation is what everybody feels right now. Okay. Everybody is doom and gloom, and consumer confidence and all this stuff is all based off basically inflation. Okay. It's got nothing to do with slowdown. All right. So what would hurt them more? An economic slowdown, a downturn, or inflation? And that's the choice they got to make. And, Powell looks at it through history that you can't play games with inflation, okay? Because inflation gets away, case closed, they're done, right? They don't have the tools. Once it gets away, they're done. But deflation, they know what they can do, right? So yeah, the economy, they might hit a brick wall, there'll be some pain, but they'll just they'll flip the switch and go QE, right? Like that, they know what they have to do if things get bad. If inflation gets away, they have no answers. You understand? They have no answers. It could cripple them. So that's why they're taking the approach of, they're not worried about the market. They're not worried about a recession, right? The only thing they'll be worried about is if something breaks here. And guys, there's nothing breaking. There's nothing breaking, okay? Things are starting to slow. I mean, we're not even in a recession yet. Some people are saying we're not in a recession. You got jobs are gangbusters out there. You know what I mean? So nothing showing signs of breaking yet. Nothing showing signs. And, I'm not saying that's good and bad, right? Good for them, but not good for us who want to see this over and done with, right? Because it gets drawn out. It gets drawn out. But yeah, it's a bad spot, guys. It's a bad spot. What are you going to do? Listen, I've been through a handful of these things, right? I have to get through them. I'm the old man I am because of it. You guys there's no way to avoid this stuff. If you're going to hang around this game long enough, you're going to have to try to navigate through this, right? And honestly, I told you guys last week or the week before, anybody who's new, you're better off. Don't listen to anybody that, you're unfortunate that you came into the market now. You're better off you came in now. You got nothing to lose now. You understand? You got only to gain both knowledge and experience. And when it turns, the real turn is going to be the real turn. And you'll be around to make, to pick up the money. That's what everybody gets made, right? Everybody who gets to the next level in this game, it's out of this. It comes out of something like this. Why? Because in the good times, you can have a couple great months. And if you get caught, right? If you get caught holding the bag and you get caught in something like this, you're giving it all back and then some, right? But if you come in when it's a menagerie like it is now, and you're ready to fight when things turn, you got a lot of time. You got a lot of time to build, I guess is what I'm trying to say. Sometimes I can't, I try to paint a picture for you guys, but I can't. Yeah, so you guys who are new, but see, the problem is you guys, especially if you were on social media, you saw and still see all these things, guys, that are make-believe. There's a lot of make-believe shit out there. Even now, there's a lot of make-believe shit out there. You understand? Shit that can't go on. It can't go on. It's not because I'm a boomer. I've seen it in different other facets out there throughout my career. Yeah, they make it look so easy. You know what I mean? They make it look so easy. Or, all these coins and shit. And it looks like they're printing money. But they're all going to get buried now. You know what I mean? They're all going to get buried now. Now, granted, there's a lot of people who made a lot of money, but they cashed in their chips a long time ago. You know what I mean? They made sure they locked up and cashed in their chips a long time ago. I'm sure they'll give some money back, but they made sure they locked up their money a long time ago. Trust me. So you guys saw a lot of make-believe shit out there, which Bill's bad habits, it teases you, it teases you. But it can't, listen, it doesn't last forever. It's all fine and dandy when it's going on, you make money. Who am I to tell you not to, right? I feel like I'm the sucker when this shit's red hot and everybody's making money and I'm just staring at them. But you got to be able to realize, like, right now you're in a different ball game right now. There's no money just flying around out there like there's been. It's a whole different can of worms right now. Yeah, and Praveen, right? Like, people were talking about that the other day. You have an age group here who's managing money, right? They put it in coins and shit like that. They've never been through a correction that lasted longer than 2 months. They never had interest rates, period. You know what I mean? They never had anything that gave them a yield. You know what I mean? It's been all risk assets, speculation, right? You want it to be aggressive, you want it to speculate, roll the dice, and you're going to get paid for it. Those days can't last forever. They can't last forever. I mean, they lasted a long time. Yeah. Listen, I mean, that's a great quote, Dominic. I love that quote. I got a picture with that quote on it. Nothing, listen, we could see the Fed, right? Shit can hit the fan and the Fed might have to do this all over again, right? Because it's a bad scenario and they're going to have to pump money into the system and all that stuff. And it'll probably inflate another bubble. It always does. But they never stay inflated. You know what I mean? The air always comes out at some point, always comes out. But listen, back to the market. That's the answer to the question we need to find right now. Okay. Where do we find, and here's what we were looking at, right? Let me try Ani's thing he was showing me. How come it doesn't work, Ani? Where's Ani? How do I put in a date, guys? How come I can't do it and everybody else can? When you put in a date here, how do you do it? Alt G? What is these little secrets I don't know about? I forget it by the time I find it. Everybody has access to all these little techniques, but me, right? So, we were talking about this on Sunday, right? When you get that capitulation, right? When you get that throw in the towel where everybody gives up, you get the V's, right? You get the quick snapback V's. Okay. When you don't, it leads to bear markets. Okay. And you get this stuff. And this is what I wanted to show you 2000 if I get back there. And when I'm on Zoom, I can't even scroll back. When I'm off Zoom, 1, 2, 3, I go back there. All right. So even like 2008, just examples I'm giving you here. Okay, so like, do we get something like this? You know what I mean? So look at like all this time. What is this as a whole here? You're talking about a decent, Jesus Christ, that's almost a year, right? And then this happened. You understand? So I know it doesn't look like much, but this trading range here, well, let's even take it from here. All right, where you kind of had a floor and through time you wore off some of this offside positioning out there, right? Because that's part of the problem that everybody, this is the first time in my career that I've seen anything like this, where everybody knows now the Fed is rigging the game. You understand? Like everybody knows it. It's common knowledge. So all the professionals are positioned for it. You know, that's the only reason that I even think there's a possibility of some sort of relief, range bound rally or something to that effect. Yeah. And then, but you know what? Who said that? Yeah, Dominic, exactly. It's orderly, and this has been orderly too, to tell you the truth. But it's orderly, feels mechanical, and then shit hits the fan after it. You know what I mean? And this is where, this is like what I'm talking about, where everything's on fire, it feels like. You know what I mean? Everything's on fire. Like I told you guys, this whole period, this whole entire period here, for me was a blur. Like I can't even remember it. We were talking on the webinar with Katie recently. When I went on with Katie, like he remembers shit from it. I don't remember anything. This was all a blur to me because the whole world was crackling and crumbling around me. You know what I mean? It was all, everything was on fire. You know, it was very similar, Dominic, very, very similar. And then it got to the point, like I'm explaining to you, it got to the point where just a lot of people lost interest. Like if you couldn't buy puts, a lot of people lost interest in the market at this point here. You know what I mean? When this finally gave up, if you couldn't buy, like everybody was looking for bank puts at the time. They were buying, you know, way out of the money bank puts because every bank was going out of business. But you know, people were pulling money out of accounts. There was all losing interest. Every, you know, wanting nothing. And not only was the market, they were getting blown up all over the place. And that's another thing what's likely to happen here now, guys, too. Right? That I don't think we talk enough about because we're just stock, you know, options and market guy people here. Okay. There's going to be pain outside of the market, right? Like the real estate market, right? Already we're seeing the crypto markets. Like you're talking about legitimate pain across the board, you know, across the board that's going to be felt. So it's not just going to be stocks. It's not just going to be stocks. But this, you know, this kind of reminds me, right? We were talking, I remember Lourdes, remember we were talking about this on a webinar. It's starting to look more and more like that 2000, right? Very similar feel to that 2000 top. And look at this though, okay? Just so you guys get an idea. See this? And this is not even the NASDAQ. This is the S&P 500. You know what I mean? Like, look at this, right? A lot of bears get eaten up. You're going to have a lot of bulls that think the worst is over. Anybody who is looking for green shoots now, at this point here, they're going to be all bulled up. You know? And then look what happens. So, but that's the one, to me, that's the one question that's out there. Do we have something like this? Okay. Or do we go into the shit get bad and we get that liquidation phase from here? And if we get it, things can get really dicey. But we can come to an end quicker, you know? And because most likely what's going to happen, the Fed would have to pivot if we get into something like that. You understand? You know, I don't want to get anybody bunkered, ready for their bunker already. I mean, you know, we've been bunker bound. You got to stay optimistic, you know, because even me, like I'm telling you guys this, we don't know what the future holds. You know, something can break a few weeks from now. Right. And there'll be some short-term pain in the markets and shit'll look scary, but you'll get the Fed pivot. You understand? And even though things may not come storming back off a Fed pivot, you have a floor to play off of for the time being, and then eventually, start an uptrend. But I think once you get that out of the way, I think we're going to start to see buying show up again. My opinion, I don't know these guys personally, but I think the problem is that why would anybody want to buy knowing that that's the risk that's still out there? That's what a lot of not, people who know what they're talking about think that's when it's going to show up, right? So what Tree's talking about is kind of like what we're explaining here. You get a break, a little relief, okay, kind of like what Hartnett said. Bear market goes into a little hibernation for the rest of the summer. You get a range bound / bullish bias, and then notoriously every September or October, shit hits the fan, and that's when usually you get that Fed pivot and capitulation. But again, capitulation, when you get capitulation, that's when we have to worry about FOMO. You know what I mean? Without capitulation, you don't necessarily have to worry about FOMO because the market usually is not going anywhere too fast without retracing. That's usually how it goes. Capitulation is what creates the market running away from everybody who spit up into that weakness. You understand? Well, capitulation is basically just, like my definition of capitulation is people giving up, right? Players, investors giving up. And what that usually leads to, you get a spike in the VIX. It doesn't have to be any particular number, but it breaks out of a range that it's been in, right? And that's suggesting that people are panicking from where the emotion they've been in. You get a spike in the put to call, and you see it in fund flows. Like you see money come storming out. Like a lot of people think we've started to see capitulation in the bond market, right? If you look at bond flows, they look nothing like equity flows. Money's been pouring out of bonds. No, I mean, it's usually not prolonged. What happens is, like for us, we'll see capitulation in a day, but in other words, the ramifications of that capitulation can linger, but that doesn't matter to us because they're already, they're in the process of spitting up. You're looking for opportunities in that. Recovery, well, that's the thing. Like when you don't have capitulation, okay, you can have a recovery, but you're not getting that V-shaped uptrend. You understand? Right. It's the hockey stick we talked about, right? The hockey stick. Like I don't have the exact numbers to go back and look. I should do it one day, but from just my recollection, my memory, okay, every single turn from bear market to bull market had capitulation at the end. Okay, later T had capitulation at the end. There were bear market rallies and pauses in the bear market along the way where there was no capitulation, but eventually there was capitulation at the end where everybody gave up. Where everybody gave up. So, but again, you don't want to, just rely on that. But I just think the stuff we're looking for, we will see. Like, even if we saw a form of capitulation, okay, I think we'd see buyers in the flow show up. Okay, I really do. Because they would acknowledge, they would look at it as, okay, there's a floor here. so we get to get long some stuff. I think the fear is that holding anything into capitulation can be very painful. You know what I mean? Like this simple chart, right? You go through a period like we're in right now where the Fed is rigging the game, right? This is as like dicey as a bear market as you're going to find. The Fed is rigging the game into a global economic slowdown. Okay, like I told you guys earlier, you can't draw it up any more negative than that, right? Like let me try to rephrase so you understand. If you ask Jesus, what would be the most bearish setup as far as the market's concerned? Like what would be the most bearish backdrop? And the answer to that question would be the Fed rigging the game into an economic slowdown. You got the point? You know what I mean? Like you can't get any more, you can't get worse than that. You can't get worse than that. You cannot get worse than that, okay? So that being said, we got to believe that the likelihood is, right, we're in an environment like that, that you're going to have a legitimate cleansing. You know what I mean? This is not going to end with this up here, right? Would that make sense? Would that make any sense to you guys? You follow me? Would it make sense? You have, a legitimate bear market where the Fed is rigging the game for the first time into a slowdown, and fund flows, players just stand pat and ed throughout it, the whole process? Like that would be shocking to me. That would be shocking to me. Yeah, it's just, it's every bear market we've been a part of, this goes. That's part of the, again, like the process of the bear market. What is surprising already is that they haven't even started yet, right? That's pretty surprising, but very similar to 2000, guys. You want to know why I get the question all the time, right? You traded through 2000. Why did everybody hold all those tech stocks and internet stocks all the way down? Right? Same thing. Same thing. They wanted to wait through it. Why? Because they were trained by the market that if you sold into any pullback, you were an ass. You understand? All you had to do was hold. All you needed was time to make back your money and then some. Every correction throughout the late 90s, and there were plenty of them, if you sold into that correction, you were on suicide watch because you missed out on ridiculous upside to new highs each and every time. Until finally, in March of 2000, that pullback never came back. So the market trained everybody, never sell your tech stocks. Don't be a jackass. Diamond hands. Sound familiar? Diamond hands. Same shit. You see people right now, even more than equities in crypto saying that. No? I see everybody saying that in crypto. Just don't worry. Hold on to it. We've been through this winter before. We've been through worse. Huddle. So, it's nothing new. I see, Dominic, you took a trend. Let me ask you a question. Trend trading, okay, is all fine and dandy, and it looks easy, okay? But what's the trend trade? Tell me. The trend trade is what? What's the motive there? In other words, if you're a trend trader, right? What are you doing right now? Are you shorting? What are you doing? Are you shorting today? You understand? Like, what do you mean by trend trading? Again, these things you guys hear, they make it sound so easy. They literally caught the highs and they've been short what on the same entry or been shorting what every week? Like, explain to me. What do you mean been short the whole year? So they literally caught the highs, and that was their first short. They never shorted before. Okay, so listen. That's all fine and dandy, right? Until you get into a market, right? That more than likely probably will follow, and you get into periods like this, and then what do? You know, what do you do? You know what I mean? Yeah, listen, it's all the same shit. You know, in bull markets you go long, right? In bear markets you short. The problem is now in this bear market, if you're not short already, there's no easy money. I know more shorts losing money than bulls right now. So don't believe the stories. You know, yeah, it's easy for them to point out, well, I shorted right here and I've been holding short throughout. Let's see the first real bear market rally that comes, what they do. Let's see what they do. Let's see what they do. They make it sound so easy. There's no easy, Dom. There's no easy. These are the same, they may not be the same exact guys, but they're the same type of guys who were telling you to buy all the SPACs and all the other shit when everything went haywire and up every day. Like it was going to last forever. There's no easy money. Don't listen to these guys. Right. If you listen to these guys, you'd be buying fart jars and holding them right now. Yeah, I'm talking about pros. Even the pros are worse than the jabronis out there. The pros my ass. Pros. There's no easy money. There's no pro making easy money here. Don't listen to these guys. They're full of shit. You got Drunken Miller in an interview told you right to the camera, right to the face, I'm not doing shit right here. I don't know what. You short here, you get your ass run over. I wouldn't go long here for the life of me. I'm just going to wait patiently and sit for a fat pitch. You got Drunken Miller telling you that he can't figure out a thing to do here, but you're telling me some guy on Twitter has some magic trend trading system. Get the fuck out of here. There's no easy money. Okay, you want to know the easy money? The easy money, if you can do it, when you get into this type of environment, you sit on your hands and you don't do much, period. And you wait for better times. That's the easy money. That's as easy as it's going to get. There's no, and that too, Mark, and that. There's no, outside of that, there's no easy money. Yeah, even listen, that's what I'm doing, Praveen. But the last thing I would tell you is that it's been easy. It's been the most annoying shit in the world, day trading. The most annoying shit in the world. Yeah. Day trading, I told you, the way I look at day trading is it keeps me involved. It's almost like me sitting in a cash position and trying to grind it out and make some money. You know what I mean? That's it. No, Presley. I've been coming on these webinars now for the last couple. What? Again, I have no track of time. Maybe what are we in? We're in the end of July already. You believe that shit? I can't believe it. I mean, it's ridiculous. But what do you think? I come on these webinars, Presley, and I scare the living poop out of you for the last couple months, and I'm loading up on coal somewhere. I'm not buying shit. How can I buy? I can't buy. You know what I mean? Yeah, for me, like I need to see sweeper activity to buy. I need to get excited to buy. You understand? I need sweepers to excite me to buy, especially in these times. They need to even excite me that much more for me to buy, because the lack of the actions screaming to me, chill, relax. There's no money right now. There's no money to be made right now. All right? It's easy to pinpoint one stock that's bucking the trend, or, this one's outperforming, very misleading, very misleading. You're going to find that one or two stocks, or even that one mini group that's been bucking the trend. It's possible, but it's not easy. Yeah, but Dominic, Jim Rogers is an investor. You're talking about investing. If you're talking about investing, it's a different story. Okay. If you want to be that, you can be that. But then there's no point of looking at the market every day, because you're not buying and selling every day, every week, every month. You'll go years without buying if you want to be that. You know what I mean? Well, I'm saying that's investing. That's investing. But that's a different story, right? Investing is a whole different story. We're a lot more active than that. Yeah, we're all investors, but we don't come on here and talk about investing. There's only so much you can talk about investing. It's a lot less active. You know what I mean? A lot less active. And even that, they make it sound easier. You know how many people I know who sold and looked right for a lengthy period of time and never got back into the market? You know how many people during that 2008 bear market got out and looked like they were gurus for getting out early, quote unquote, and never got back in ever? Again, easier said than done, even for investing. Easier said than done. For what we do, okay, the basic premise is when things are good, right? Especially early on in that cycle, you try to strike when the iron's hot, right? And from that point, you're trying to hold on to whatever money you make in the process without trying to give it all back and then some, okay? And when things go sour, and they're obviously sour right now, you do a lot less, if anything. You know what I mean? That's it. You can make it more complicated than that if you like, right? You could throw some macro shit in there if you like and sound more intelligent, but that's the basic premise, right? So like for us, when the price action starts to act constructive and we start to see some real sweeper buying coming in, and we see new names hitting the board, right? And we're getting excited about those names because they're in new hot sectors, or they got explosive growth rates, or whatever it may be, right? And we start talking about individual names again. Okay, that's the time to get a lot more aggressive than we are right now. Okay, but right now, when we come on this webinar every single time, every single week, and we talk about the lack of ideas, the lack of constructive price action, the macro backdrop falling apart. You know what I mean? It's just the answer is very simple. Right? You try not to do much. That's it. Don't bury yourself. There's no point. Yeah, but it's it for, like, again, maybe it's because of his experience. Discipline. I think it's a lot more difficult at other times to be disciplined. Discipline now, it's so obvious that it is extremely difficult out there. You know what I mean? Like, it's so obvious it's bad out there. There's not anything good going on right now. Like, it doesn't take that much discipline, right, to be conservative, be careful when it's a menagerie. You understand? It takes discipline when the market goes up in a straight line and SPACs are quadrupling to refrain from that FOMO emotion and start buying every SPAC at the tippy top because they go up every day, right? That takes a little discipline. That takes a lot of discipline. But right now, like, you know, it's bad out there. I mean, at this point, you gotta be aware of that. We all are. There's not one of you out there. Like, I told you this 2 months ago. If I took a survey on this Zoom right now, and I asked you a question, you know, right now, is making money easy, hard, or extremely difficult? Every single one of you would tell me it's extremely difficult. You know what I mean? Without even putting thought into it. So that's your answer right there. That's your answer. Simple. You know, it doesn't mean we're degenerates. We can't play. We can't do something in the process. You know what I mean? Try to make a little bit of money, even if we lose a little money. There's nothing wrong with that. But you know, you can't. There's no easy way in this. You can't get aggressive in this. There's nothing out there. Nothing out there right now. Wait. You have to, whatever it takes to wait it out, and you have bullets to fire when you're going to need them. That's the goal. If somehow, some way, you make a little bit of money in the process via day trading or whatever the hell you're doing, right? And again, maybe some of you are strictly day traders and do well. You know, that I'm not talking about that, but I'm talking about just the regular player out there, especially on the newer side, right? You do whatever it takes to get through this period. You make a little bit of money. No one's better than you if you found a way, okay? Even if you lose a little bit of money, think of it as you paid for a lesson from the market. But there is no way you should get destroyed in this. No way. There's no way. It's foolish. You know what I mean? Foolish. There will be a better time, I promise you. There will be a better time. Just like last year, I could have guaranteed the same thing on the other side, that this is not going to last. Eventually, it's going to come to an end. You know, that's the market. That's the beauty of the market. That's the beauty of the market. But yeah, so anyway, tomorrow we have the CPI. We'll see how that shakes out. There could definitely be squeezes intraday, worth keeping an eye out for a lot of us who are playing intraday. So, you know, we want to keep an eye on the sweeper activity, right? That's what it comes down to. The last thing you want to do is, at least for myself anyway, I could talk. I'm not going to force an entry into aggressive put sweeper activity no matter what, right? So if tomorrow the CPI is hot and put sweepers they go bombing like they've been, okay? No matter what, I am not going to try to get in the middle of that and catch a squeeze. I may miss a squeeze, very possible, but I'm not going to try to get in the middle of that for a squeeze, right? Usually what happens is the put drying starts to dry up a bit, and there's some form these days of call buying that enters the picture, and that's where I look for a spot for a bounce, for a squeeze. But it's possible because you have a lot of players on the professional side who, even though they covered a little last week, who have leaned short, and they can cover into weakness. You know what I mean? And that creates upside. Like, look, some of these guys here. All right, so you see the difference here, and that's, again, this is why we've been a little more focused on trying to find intraday squeezes, because you see they lagged a little bit on the short side 2 weeks ago. Remember, we were reading the article, how they, I think it was their largest short exposure in a long time. All right, so this can help create squeezes here. They can get more short. We've seen that. But it doesn't really matter how short they get. Like, look, this was late. Oh, no, this was COVID. But, that was quick. You know what I mean? That was quick. Yeah, I mean, it's not even about being a robot, Dom. It's just, the most important thing is the risk management. You know what I mean? You can't bury yourself. You got to allow yourself that if you have more winners than losers, you make some money. That's what it comes down to. And then all the other stuff that we talk about on, sweeper activity, positioning, gamma, I saw somebody mention, all that other stuff, just tilts the odds in even the smallest favor to one side and gives you that edge. But if you're not managing your risk properly, I mean, nothing matters. There's no golden goose out there. You got to be able to lose. If you can't lose in this game, you're dead. May not be today, you're dead in the next week or month anyway. So you have to be able to lose. And once you get on the pad, more winners than losers, you're in good shape. So yeah, this is hedge funds. And look like this here, right? So this is the missing link. Look at like the Goldman sentiment indicators we look at. Like, you're all the way over here now. And what's holding it back? Amazing. So that's the fund flow we were talking about. Yeah, like this one here, like if you think about the true definition, Sean, of like real capitulation, like if you're talking about major bottom capitulation, this is the one. So it's that chart we looked at, the fund flow. You know what I mean? So because capitulation, like the true meaning is when they throw in the towel, when they finally give up. And that would mean they're giving up, right? What we can have, not to confuse you, but what we can have is we could have some form of capitulation where, let's say, the fund flows, in other words, that fund flow is not coming out anytime soon. It's going to take, you know what I mean? It's not coming out in a week, but we could have, let's say tomorrow, off the CPI, for example, okay? You get a spike in the VIX to a new high. The equity put the call goes to 1, right? And that will help create a floor for at least like multiple weeks, like we were talking about. You know what I mean? Multiple weeks, multiple months. It will help put in a floor, because it's a form of capitulation. But for that major capitulation, for this to be like done, the final chapter is usually, this. This is the final chapter here. This is the final chapter. Because then, like I said, all the fundamentals, all that stuff, like they're going to keep getting worse. So we're not going to see anything constructive out of that front. The economy is going to, you understand, it's not going to be like earnings are turning around and obvious to us, and then we're going to nail the bottom. Like we're never going to be early. When we're early, you're going to see this get wiped out, and then you're going to see some sweeper buying. You're going to see some buying. You're going to see, even in forget sweepers, even in the price action, you're going to see dips in certain spots get bought. For positioning sentiment, meaning what? On the well, right now, here's what you got, right? You got the pros are pretty much, they have no exposure whatsoever. It's just on the retail side that's left. You know what I mean? There's nothing. Hedge funds, all the systematic funds, they're all pretty much net short. So they've had, because this thing has been more time, right? This wasn't like the COVID crash. This has been more drawn out. They have basically de-risked this whole process. They've gotten out of equities. They have no equity exposure anywhere. So they're gone. They you know what I mean? So what you would see probably from them, when we get capitulation from retail, you'll see them get aggressive on the short side, and that would add to the capitulation that we're seeing. But that's what a lot of people are looking for, waiting for, who follow this stuff. They fund flows, like even Hartnett, right? Every Friday, right? You read his note. No matter what you're looking at, some indicators are more washed out than other, but you can't say you have capitulation with fund flows at new highs. That's absurd. That's scary to me, right? I don't know about you, but that scares me. That scares me. I don't know if it scared me more when it came in at the beginning of the year, because that chart is just scary, isn't it? That's a scary-ass chart, period. Let's look at it again so I can spook you guys. And you know what bugs me out about that, Stephen, is that even with the Fed doing what it's doing, they're not phased. How is that possible? Right? It doesn't make any sense. Let me see. Do I have the one? Here's another form of it. That's another form of it, though. Daily ETF flows. But let me go to this chart here. I thought I had a bigger one. Like this right here is a scary looking chart. I'm sorry. Did we get July? We got July. It's once a month, HC. That should be interesting. That would definitely be interesting. Did we get July, HC? Do you remember? I don't know if we got July. I don't remember getting July. CPI, yeah, it's more of a reaction, Dom, might play off the CPI. I'm looking for even if it's a flat market. If I see some cool sweeper activity playing a squeeze, I'm going to try to get in the middle of it. But that's basically HC. Whenever I see it, you'll know I'll shoot it out. I'm curious if we got July. I don't remember. But isn't this bugged out? How they just came in at the end here. It's just amazing. It's amazing. And do you remember the conversations we were having, Stephen, throughout the bull market? Do you remember the conversations we were having about this? that the music doesn't stop. Remember, we kept saying the music is not going to stop until what? Until this happens. Remember, do you remember us having that conversation? I remember specifically you talking to you many times about it. Right? As the market continued to rally and as dips continued to be bought throughout from the COVID lows on, right? As crazy as shit got. Oh, so maybe it's coming up. Oh, that's good, HC. I thought maybe we had the July already. I'm telling you, I have no track of time. But yeah, so when the market was going up, it's rare for a bull market to end, okay, without this coming in. Okay, bull markets don't end. You get corrections, okay, but you don't go into bear markets and the bull market doesn't run out until these guys show up. That's usually the final chapter. So now we're in, on the other side. And the final chapter usually has these guys thrown in the towel. It's going to be really interesting to see when they start what it looks like. You know what I mean? Because like you think it happens fast. It's going to happen fast. You're going to get like a month or two of just bang, bang, bang every week outflows, huge outflows. I don't know what the price action is going to look like. That's what people like our Goldman boys that we follow, that's what they fear, is that what kind of impact does it have on the price action in an illiquid market? Right? Because this money was coming in every week in that, all that money was coming in and needed to be put to work. Like coming out, I don't know, maybe, maybe the quote unquote smart money buys it from them and the price action doesn't look as bad, or am I being too optimistic? And look down here, look down here. I am, right? And then you got this here. Global flows, like when they do like this to 4 weeks, it doesn't look as bad, But even here, you see what usually happens. Look at this, Stephen. Late 2018. And this was COVID. Now you had other like minor lows. I think you're missing the 16 here. You had other minor lows where you didn't have to get this type of capitulation. But like I was saying, in the environment we're in right now, with everything going on, like, the Fed doing what they're doing, you don't think we need to see something like this? I don't know. Maybe it's more gradual, Maybe it's something more gradual. Our boy, Tony P. Tony P. Corleone. All right, ladies and gents. Anybody have any questions or anything they were curious to see on today's webinar that I didn't go over? I mean, we couldn't. There's no point in talking names or anything like that. I don't even have any names to talk about. I don't have any names to talk about. I know there's some stuff that's been acting better out there. I've been watching it here and there, like some biotechs have been acting better. But where's the flow? I don't see any flow anywhere, I don't like that. I don't like that. Because a lot of these things needed to squeeze too. Now, maybe the flow doesn't have to show up here. The flow could show up on a dip. You know what I mean? We could get that. Sharpies, here's the problem with Sharpies. Okay, we didn't talk about Sharpies. That's a good point. Just quickly. Sharpies, we already saw one instance where they played it the same way. And honestly, if I had to bet, and again, I could be wrong, but we would start to see things that look different. Oh, the like my opinion, I think Sharpies are going for this again. Like it looks minuscule, but remember that squeeze? Right? So what I think they're positioning for is that relief that we spoke about. Okay. Now, if that's the case, okay, yeah, that squeeze happened really fast. And here was the problem with that squeeze. Because this information lags by a few days, okay, they were doing this into the squeeze, literally into the squeeze, right? So you didn't really even have a chance to get any decent entry and get out for a trade. Like right here, look. Okay. So like, if I remember correctly, we got one update here that they started to do their business into the lows. And then the next update was like right here. You understand? Okay. So now you're here and Sharpies took all their hedges off and they're net long. Okay. This thing, like you guys just pointed out, already squeezed so hard, so fast. Okay. Now, this is where I changed my whole tune, if you haven't noticed. You see this? Okay. If things were going to play out the way we would have wanted it to play out, sweepers would have bought the living piss out of this. Okay. Sharpies would have stayed all in, and sweepers would have bought this dip right here like Santa Claus was coming down the chimney. Instead, what do we see? We saw put sweeper, put sweepers, put sweepers, put sweepers. There was no call buying at all. At all. Okay, at all. Not to mention that it was all weeklies into this too, but that's besides the fact, because this here, once this rolled over here with no action and then Sharpies took off that net long position and put on some hedges, it was confirmation that they did it just for this. Like maybe they didn't anticipate it happening this fast. You know, maybe they thought it was going to be more drawn out like I did. I didn't think it was going to go like this. I thought this was going to happen over a period of, you know, like a month or two at the least. But once that happened here, then we knew what we were in. And that's it. The Fed was gung-ho. They weren't going to back off from rigging. And you got your bearish trend there. You know what I mean? Right? That was for me. Like, listen, I'm sure there are a ton of people who claim they knew over here at the tippy top that it was the end, whatever. Okay. Even if I felt that way here, I wouldn't have had confirmation that we were in the shit until here. Like, this is when shit started to, when I swallowed the pill. When I came to realization that, you know, this is not just this correction that we're accustomed to seeing, right? Like, again, it's easy after the fact to say that this was going to be the top, okay? But it could have been this. You understand? It could have been that. It was a possibility, right? Now with knowing the Fed doing what they're doing, of course, it's hard to even imagine that. But, and this is where, if you remember, we really started to acknowledge, like, we got confirmation, like, oh man, the Fed is really going to do this. Like, they're going to rig this game. Like, guys, I don't know what you guys really thought the Fed would have the gusto to do this back if we were talking about it back here. Yeah, I, you know, again, coming out of 2009, I heard the same shit, so that's why it was hard for me to believe. But right here, like I said, you know what I mean? As bullish as I wanted to be, it was disappointing. You know, because you guys know I wanted to add SPY and I wanted to start adding names. Remember, I was already anticipating sweepers loading up on names because that was part of my plan, right? Into this, whatever names they hit hard, I'm going to start buying. That was my plan. You know, they never hit anything. And, you know, that's the reason why. So now we're here, okay? And same thing, okay? You have to pay attention to the spots because they're important in these type of markets. Sharpies took off their hedges here. You understand? And now what they've done here this week is they added some net long exposure. You know, so me again, I don't know them personally. I think they think something similar to back here. They think this is at least there's a floor going to be put in here. You know what I mean? Only, and you know why? Because positioning is so lopsided. That's why they're taking the other side of that. They don't do it all the time, but that's what they're doing here. You know, but think about the predicament. Even if I wanted to get bullish or sharpies, let's say even I just wanted to put it into action, not even be aggressive. I just wanted to, you know, sharpies took off their hedges. I want to take some risk. I want to put on some risk. I have nothing to buy. You know what I mean? I'm not loading up on S&P 500. You know what I mean? Like sweepers are my confirmation for everything. Like if the environment's going to change, sweepers are going to be a part of it, guys. You know, I have that confidence. Okay. It doesn't mean the price action is going to look good. Okay. I'm not confident in that, but we will see sweepers doing their thing and accumulating names. Okay. And those stocks may not do anything initially, but they will keep coming. And you're going to start to have a list. We will at the least have a list of names that on this webinar, we can go over and talk about the action. Okay. I've been talking to you guys for over an hour. I haven't brought up one name. And not just today. It's been every single freaking webinar. You know, there's been nothing new. I can't, like, the last time we had any new, the last time we had any new action, quote unquote, new initial activity was the commodity names. Right? That's it. The commodity names, energy names, and right, Devon, Oxy, CVE, Alcoa, all those names. Okay. All those names, right? When those names just started to catch that first round of action where commodities play, that was the last time we had initial activity. Now that started late last year. It carried into early this year. Okay. And now, you know, these things are in correction and, you know, the flow's not as clean there. You got a lot of long money in these things now, you know, so there's a lot of rolling. I mean, hell, you got Warren Buffett loaded to the gills buying the shit out of Oxy. You know, so the problem with the flow there now is they're not new names. You know what I mean? They're adjusting positions. So, but we need new names. We need new names. New names. Valero, that's another good name, right? That came in. They all come in. You see this one? How about this one? This one was a home run, AR. But, you know, for me to get bullish on these things, it's more about time than anything else, right? I want to see these things. They don't have to get hit any harder. They got hit enough, okay? but I want to see them go dead for a bit. You understand? I want to see the flow go dead. I want to see them go dead. There's still too much action going on, you know, because again, these aren't new names anymore, guys. Like AR started to catch action here, right? So, you know, think of all the action we're oohing and on in AR. Okay, you got players, they don't flip like us, who have been holding, remember all that long-term buying we saw in the name? They're adjusting positions. We don't know what's clean, what's not. Or even this one caught some flow again recently, CVE. Right? Like, look at these moves. So that's why I can't get excited about the little bit of flow we see from time to time now. Like Oxy now, everybody and their mother likes Oxy. I mean, Warren Buffett's buying with two hands in front of everybody's eyeballs. You know? So like today, we saw what, a couple good looking December sweeps, but you see, I posted here. Right after these things catch action, well, with everything now, I post the overall action so you guys can get an idea of what's going on. All right. So today we saw a couple of sweeps in December's Oxy. By the way, when all these names started to catch sweeper activity, when we noticed them late last year, you never had 10 different lines. You would see just that line with action. Remember? That's it. There wasn't all this action around. All right. So now this guy, where are they? They're not even on this. They're not even showing here. Okay. So they're down here somewhere, the Decembers. Okay. Two good looking sweeps. How do we know this July 60 guy is not rolling out, or this July 65 guy, or this July 61 guy, or this August 60 guy, or this July 5th, oh, that's opening. This guy who looks closing, or this guy who looks like some closing, or how about this guy? Oh, this is a seller opening. You understand? It's a mess. It's a mess. You want to see even better than this? And you guys want me to figure out if it's clean in this shit? Look at this. And, you know, these are widely active names, right? Good luck, Sean. Good luck. Yeah, tell me if that one sweep in Amazon was clean, please, Sean. Can you tell me if that guy rolled or not, please? Look at this. You talk about menagerie. If you want to know the definition of menagerie, this is what menagerie looks like. How much shit hit the bid today in Amazon? Puts, calls, spreads. Look at this. All right. So again, that one order, you know, I can dig into it a little bit and see if it's a legitimate buy. Great. But how do I know somebody didn't close something else? You know what I mean? It's impossible in these things. Yeah, plus, you know, it's all the action around Prime Day. It's too noisy. It's too noisy. It's way too noisy. You know, again, think back, like all the names, all right, the new leader, and even, here's the thing, okay? Even if you don't play the new action, okay, if you see it, it tells you that the environment's healthy, right? So like an example, you see them come in and they sweep Oxy at the beginning of the year, AR, CVE, and XYZ, right? All energy names. Even if HC likes Valero better, okay, and Valero's noisier, the flow, you know, you can still make the case for getting long Valero because you see all the action across the board in the sector. New action. It tells you it's healthy, right? There's risk appetite there. You know, so that's why it's important to see new names, new action. Right? When we first started to see action in Oxy, you would just see all the action we saw, you would see here. A sweep came in for 3,000, you would see the top line, 3,000, that sweep and peanuts underneath it. You know what I mean? You could account for all of it. And that was the sweet spot for Oxy or Devon or AR or CVE or any name, anyone, Alcoa. You know, now it's just there's too many people. Look at the move. Okay, Oxy, even some of us with the flow didn't want to buy it back then. Now everybody knows how bullish they've been. You know. Well, it's not. How's it going to go anywhere now, HC, with the sector now? You know what I mean? It's not going to buck the trend here and go higher. It's holding up, though. You know what I mean? It's holding up nice, but how's it? It can't go higher while the rest of them are under pressure right now because of crude. But yeah, these things very easily could be a buy again, no doubt. No doubt. It's going to be interesting what crude does, though. It's going to be really interesting. You know, you got that tug of war with crude. Because, you know, you probably hear this, people talking about it. In 2008, right? 2007, 2008, when shit hit the fan, okay, crude had a similar move. And it's like deja vu. The argument back then was how a recession would take down crude, okay, but it took time. It didn't do it right away. You know what I mean? Like the economy really started to roll over before crude gave up. Like it took a while. So that's what makes this interesting here now. You know, is this it for crude? Is this it? Is it done? Or does it hold up, you know, a bit longer because of supply demand currently? And then the economy takes it down eventually. 2000, yeah, there was, I don't remember exactly, but it was very similar. Let me see here. Oh, God, here we go again. I got to scroll back. It was very similar. Like, I remember the same conversations, put it that way. I remember the same conversation being had then. Look at this, okay? Look at that move, Jim. You guys thought I was lying, right? Look at this. And then look at this, guys. Okay? You see this? That's guys like me who are scared to buy crude and commodities right now. That's why. Okay? That's why. You see it now, Lourdes? The total opposite. This generation of traders, they got clear heads, Lourdes. You know what I mean? Then nothing bad has happened in their careers, in their lives. I have black and blues and scars all over my brain from this shit. You know, because it's like right now, okay, that's my thought process is like, okay, crude, it could be bullish here for a little bit. But if the Fed's gonna really break this thing, right? If the Fed's really gonna slam on the brakes and slow this economy and we got a hard landing, this is coming. There's no way around that. It's only a matter of when. You know what I mean? It's only a matter of when. It's coming. So if you believe that with if that's your thesis with the Fed and the economy, you're asking for a miracle for crude to do the opposite. They know you got some great sound quotes from back then. I tell you though, but it was must-see action every day. Watching shit blow up all over the place. Well, if you weren't losing money, it was entertaining. But yeah. So this is the fear right now. You know what I mean? This is the fear. You know, are we here, or are we? Where can we? Are we here? Yeah. Well, that's what people, everybody was a loser still, no matter what back then, everybody was a loser. That's what people were shorting in the market. Go, go snuggle up in your bunker, easy. Everybody was losing. Everybody who was shorting in the market was making money, but they were getting crushed in real estate, in this, in that. You know what I mean? Everything was blowing up. There was nowhere to hide. There was nowhere to hide. Even like gold and all those things. Oh, I can't. I'm not scrolling back again. You know what I mean? Everything. ZS. I mean, that's a real stock, isn't it? ZS is a real stock, but I mean, can it survive? Oh, yeah. What's? Oh my God. They're not. I thought they were profitable. Or maybe they are profitable. What did they take a one? They still. What's it trading at? Like 6,000 times earnings? Yeah, I don't know. So you know what I mean? In this mess, I can't. I have peace out. I don't even have an opinion in these things. I really don't. I don't. When this blows over and we go into a more normal environment, all these names we can, we could talk about what they do, what the action they caught, what sector they're in. Now it's like a waste of our saliva. It's a waste of our saliva now. Yeah. Yep. True that. Well, what are we gonna do? Listen, we got some action tomorrow. CPI in the morning. And let's see how they lay them out there tomorrow for us. But some days intraday have been better than others. I've had a couple of decent days intraday. They're not all shit show. But there's a good handful of days where I can't even get out of my own way. So, but it's the life the web we weave right now, the web we weave. Guys, gals, keep your head up, keep your chin up. All right. The sun will come out, maybe not tomorrow, but sooner than you think. Yeah, even 50 Cent losing money. Everybody's losing money. Everybody's losing money, but it shall come to an end. Trust me. Patience, young grasshoppers, patience. Guys, always a pleasure. Thanks for coming by, talking some shop. Good luck mañana, and I'll see you the rest of you. I'll see you in the morning. Have a good night, everybody.